Hello everyone. In this video, I will share some useful tips and strategies to help you with your trading. If you find this video helpful, please give it a like and subscribe to the channel. Now, I'd like to review the EURUSD chart from the past few days and discuss the outlook for the future. Before we begin, let me explain two key points about my analysis method. The first point is multi-time frame analysis. To confirm the long-term trend, I start by analyzing the weekly chart, followed by the daily 4-hour and 1-hour charts. Checking the long-term trend is essential in trading. When making an entry, I also analyze the 15-minute and 5-minute charts. Additionally, I follow Dow Theory for my analysis. To briefly explain, an uptrend is defined by higher highs and higher lows, while a downtrend is defined by lower highs and lower lows. A trend reversal occurs when this pattern breaks. If the price breaks below the most recent low after reaching a high, a downtrend begins. Let's take a look at the EURUSD chart. First, let's go over this week's price action. Here we have the weekly chart. This week, the market formed a bearish candlestick with an upper wick. The strong upward momentum we saw last week has paused, and we're now seeing signs of a pullback. The upper wick here suggests strong selling pressure. Since the market failed to negate this wick and dropped lower, the bearish pressure seems to be holding. If the market had pushed higher and negated the wick, we might have expected further gains. But for that to happen, a dip followed by a rebound would likely be necessary. Next week, we'll be watching closely to see whether this pullback continues. Now let's move to the 1-hour chart. The yellow vertical line marks the beginning of this week. After opening, the market initially moved higher, but it failed to break above the 1-hour swing high that we mentioned in last week's video and started to decline. During the NFP release, the dollar briefly weakened, but that move was completely retraced. As a result, bearish momentum appears to be slightly stronger at this point. However, the 4-hour daily and weekly trends are still bullish overall, so there's still a possibility the market could try to push to new highs again. The key level to watch is the 4-hour swing low. If that's broken, the 4-hour trend will officially shift downward, and that would be a strong sign that a deeper correction is underway. Let's now step back and analyze the market starting from the weekly chart. We're currently seeing this kind of wave structure. After breaking through the resistance line on the weekly chart, the market is now in an uptrend according to Dow Theory. That said, the current price is in a high zone after a strong rally, so entering long trades here would be risky. Also, the presence of a large upper wick signals strong selling pressure, so we should stay open to the possibility of a deeper correction. If you're aiming for a conservative approach, it may be best to wait for a pullback before considering long positions. Now let's look at the daily chart. The uptrend is still intact. As you can see, recent bullish momentum has been very strong. Just like last week, the swing low remains here, and unless the market breaks below this line, we can assume the daily trend remains bullish. That means we can expect the market to potentially form a wave like this. Since both the weekly and daily charts are showing bullish structure, the basic strategy should be to look for buying opportunities. That said, if the market continues to rise from here without a pullback, short-term selling opportunities might also emerge, especially if the price reacts at clear resistance zones like this or this. Next, let's move on to the 4-hour chart. This is the wave structure we're observing. Whether we're in an uptrend or downtrend here depends on the trader's interpretation. First, if we consider this swing low, which is the most recent low before the current high, it's still intact. That means some traders may view the 4-hour chart as still being in an uptrend. However, if we focus on this part of the chart, we can see a series of lower highs and lower lows. Those who focus on that area may interpret the trend as bearish. So which interpretation is correct? In my view, there's no absolute right or wrong. What's important is having a consistent method for judging trend direction, and then combining that with context from higher time frames, key levels, trend lines, and other tools. It's also crucial to stay flexible and analyze the market from both bullish and bearish perspectives. I explain this approach to Dow Theory in more detail in this video, which you can find linked in the description. Now, in this market, we can identify what looks like a symmetrical triangle. The price broke below the triangle and is now in a retest phase. Given that this move came after a strong rally, a pullback or consolidation makes sense here. So for the 4-hour chart, my view leans bearish. If we consider this a downtrend, then this would be the swing high to watch. At the same time, we can draw this ascending channel, and since the price is near both the channel support and a swing low, we should stay cautious. There's a chance of a bounce. Also, if the market breaks above this descending trend line, that could shift the momentum back in favor of the bulls. So overall, we should be watching to see whether the price breaks above or below this key area. Now let's look at the 1-hour chart. The market has already broken above the previous swing high, so this is clearly an uptrend. As I mentioned earlier, some traders may still consider the 4-hour chart to be in an uptrend as well. If that's the case, then both 4-hour and 1-hour charts are pointing up, and those traders might be expecting a move like this. That makes short entries from the current price risky. As we discussed, it's best to stay patient and wait to see which way the market breaks out from the key area we mentioned. If the 1-hour chart were showing a downtrend with a clear series of lower highs and lower lows, then shorting here would have made more sense. So what are the possible scenarios from here? Let's start with the bullish scenario, in line with the higher time frame trend. This level is both a 4-hour and 1-hour swing low, so if we're looking to go long, it would be best to place our stop below this level. However, before entering, we'd ideally want to see the market break above the descending trend line. Also, we'd want to see this swing high broken to clearly invalidate the bearish case. If the market breaks below this key support level, it's safer to hold off on long entries and wait for signs of reversal on the lower timeframes. Now for the bearish scenario. As mentioned earlier, the current level is significant support, both on the 1-hour and 4-hour charts. Since there's a high probability of a bounce here, shorting at the current price is risky. But if the market breaks through this level and confirms a 4-hour downtrend with a clean retest, then we can look to short more aggressively. In that case, we would consider this new high to be the updated 4-hour swing high. We'd want to make sure this level remains unbroken and that the descending trend line also holds. Because the higher time frames are still bullish, it's important to watch for price reactions at prior support levels and consider taking profits early if necessary. Finally, if the price rallies strongly from here, we may see another shorting opportunity at higher levels. There are 2 clear resistance levels on the daily chart. The ideal setup would be a rally into one of those resistance zones, followed by a confirmed reversal on the lower timeframes. How did you find today's analysis? If you found it helpful, please give it a thumbs up and subscribe to the channel. I hope your trades go smoothly and successfully. Best of luck.